Hello everyone, welcome back to Stock Market Meridian. Today is 20th August 2026 and you're watching today's pre-market report. Let's begin with the global markets. Starting with the US markets. Only the Nasdaq index closed in the negative zone, while the remaining two major indices closed in positive territory. The weakness in the Nasdaq came mainly because of heavy selling pressure in AI and semiconductor stocks. However, at present, US index futures are trading in the positive zone. The healthcare sector was one of the major sectors supporting the US markets. Moving to the European markets, only the FTSE 100 index closed with a positive bias, while the remaining major European indices ended in the negative zone. Now, looking at the Asian markets, Japan, China, and South Korea markets are currently trading in the positive zone. So overall, global markets are indicating a positive sentiment for today's session.
Now let's move to the commodities market. US WTI crude oil is currently trading around $83 to $85 per barrel, while Brent crude is trading near $92 to $94 per barrel. Yesterday, Indian crude oil futures ended with nearly 0.9% gains, while natural gas futures closed around 2.2% higher. In the precious metals segment, Indian gold futures gained more than 2.4%, while silver futures also closed around 1.8% higher. Precious metals witnessed a powerful turnaround as falling bond yields reduced the recent opportunity cost pressure on gold and silver. Spot gold surged nearly 4%, approaching the $4,500 per ounce level, marking its highest price since early June. On the MCX, September gold futures rallied 2.32%, gaining around 3,554 rupees to reach 1,56,637 rupees per 10 grams. Meanwhile, MCX September silver futures jumped 2.05%, gaining nearly 5,000 rupees to trade around 2,37,172 rupees per kilogram. This sharp recovery came after the recent pullback, as buyers quickly stepped in once sovereign bond yields started falling. A major catalyst came from the US Treasury. The Treasury announced that it would increase the size of its liquidity support buyback operations for government securities maturing between 10 and 30 years by at least double. The move is aimed at cooling borrowing costs after long-term US Treasury yields touched multi-decade highs. As 30-year Treasury prices rallied, benchmark yields declined and the US dollar weakened. That created a powerful dual catalyst for gold and silver. Going forward, commodity traders will closely monitor further liquidity and balance sheet measures from the US Treasury, as these could become important indicators for precious metals. Now let's check the ADR data. Yesterday, Wipro and Infosys ADRs closed strongly higher. Meanwhile, HDFC Bank, Dr. Reddy's Laboratories, ICICI Bank, and Reliance Industries ADRs closed lower. So overall, ADR data indicates strong positive sentiment in the IT sector, while sentiment remains negative across major banking stocks. Now moving to the FII and DII data. Yesterday, FIIs were net buyers of 407 crore rupees, while DIIs recorded net buying of 3,973 crore rupees. So the overall institutional activity remained firmly on the positive side. Now, let's check the economic calendar. Yesterday, the UK and European CPI inflation data came in broadly as expected. US crude oil inventories were higher than the previous level, which is generally negative for crude oil prices but positive for equity markets. But the biggest update came from the US Federal Reserve. The minutes of the Fed's July 28th and 29th meeting revealed that inflation concerns have increased significantly among policymakers. Several members supported the possibility of immediate interest rate hikes, while there was no discussion supporting rate cuts. The Fed kept its benchmark interest rate unchanged in the 3.50% to 3.75% range. However, three policymakers dissented and supported an immediate 25 basis point rate hike. Several officials warned that inflation remains widespread and that insufficiently restrictive policy could force the Fed to implement a much more aggressive tightening cycle later. The minutes therefore show a clear shift in the policy debate from easing toward further tightening. Geopolitical tensions and continued disruptions to crude oil and gas shipments through the Strait of Hormuz were also highlighted as important sources of inflationary pressure. Markets are now reassessing the future rate path. Rate futures are pricing in better than even odds of a rate hike at the October 27-28 meeting, with very high probabilities being priced for the December meeting. Meanwhile, after mixed economic data showing some moderation in inflation alongside unexpected weakness in the July labor market, the Fed is widely expected to maintain a pause in September and assess incoming employment data. Fed Chairman Kevin Warsh also sought committee input on potentially reducing the number of scheduled meetings from 8 to 6 per year. However, there will be no changes to the 2026 calendar. Interestingly, while the hawkish Fed minutes kept bond markets cautious, the US Treasury's decision to increase longer-term debt buybacks helped ease yield pressures and stabilize equity markets.
For today, US Philadelphia Fed manufacturing data and US initial jobless claims data will be released. And tomorrow, markets will watch India and US services and manufacturing PMI data along with India's foreign exchange reserves data. Now, let's move to the geopolitical updates. The United Arab Emirates has announced a complete suspension of trade with Iran following allegations that ballistic missiles were launched toward the UAE. Iran has denied the allegations. Meanwhile, US-Iran peace talks remain at an impasse while disruptions through the strategic Strait of Hormuz continue to keep global oil markets on edge. The UAE has historically been one of Iran's largest commercial partners, making the suspension of bilateral trade a significant development. Shipments through the Strait of Hormuz remain constrained, increasing concerns about global crude oil supplies and fuel availability. Iran has also accused US naval blockades of contributing to domestic shortages and inflation. Iranian lawmakers have indicated that discussions with Oman include proposals to place maritime security and transit control of the waterway under the operational command of Iran's armed forces. Although direct Washington-Tehran talks remain halted, regional diplomatic channels are continuing to work toward de-escalation. US President Donald Trump said the situation with Iran is currently so good and suggested that talks could resume at some point in the future. Meanwhile, Iran's Foreign Minister Abbas Araghchi held discussions with Pakistan's Army Chief Field Marshal Asim Munir regarding possible diplomatic avenues to reduce regional tensions. NATO has also stated that it is fully prepared to respond to any threat following reports that Iranian planners could consider US military targets in Europe if the conflict escalates. At the same time, military activity continues in the region, with recent strikes reported across Gaza City and Nusairat. Now coming to India's major update. RBI MPC member and Deputy Governor Poonam Gupta has indicated that the window for further monetary easing is effectively closed. She warned that an interest rate hike could become a possibility in 2026 if inflation rises significantly. According to the MPC minutes, the RBI stance has turned increasingly hawkish due to persistent global inflationary pressures and resilient domestic demand. Poonam Gupta stated that there is currently no scope for further monetary easing. Headline CPI inflation is projected to reach as high as 5.9% in Q3 FY27, which could create a case for a rate hike later in the year. The RBI's projections are based on crude oil prices averaging around $90 per barrel. Despite global uncertainties, India's domestic economy remains resilient, supported by improving monsoon conditions, stronger crop sowing, rising reservoir levels, and healthy high-frequency economic indicators. Real GDP growth for FY27 is now projected at 6.7%, representing a 10 basis point upward revision. Full-year CPI inflation is projected at 5.0%, despite the expected spike during the third quarter. However, persistent US-Iran tensions and elevated crude prices remain key risks. A more hawkish RBI stance and the possibility of future rate hikes could keep Indian bond yields elevated and could also influence bank lending margins. Now, let's move to some of the important company and business updates that came after the market close. First, SEBI has uncovered an alleged fund rotation scheme involving Dhenu Buildcon. According to SEBI, a single base amount of around 25 crore rupees was repeatedly circulated through connected entities to create the appearance of approximately 1,000 crore rupees in unsecured loans. The company subsequently converted around 840 crore rupees of this alleged fictitious debt into equity. Following the transaction, the company's market capitalization surged from approximately 3 crore rupees to nearly 4,925 crore rupees. SEBI has restrained individuals and entities allegedly involved in the scheme from dealing in securities and participating in the capital markets. The regulator has also directed stock exchanges to examine compliance with applicable securities regulations. Next, BSE Limited will remain in sharp focus today. BSE has signed an agreement with global index provider MSCI to explore the launch of MSCI-linked futures and options contracts in India markets. The proposed contracts will be subject to regulatory approvals from SEBI.
MSCI indexes are among the most widely tracked benchmarks globally, with more than $21 trillion in assets benchmarked to them as of December 2025. The move could strengthen BSE's competitive position in India's growing derivatives market and provide global and domestic investors with another tool to hedge and manage exposure to Indian equities. Next, the Union Cabinet has approved major railway multi-tracking and highway four-laning projects worth 13,041 crore rupees across 5 states. The projects are aimed at expanding freight capacity, reducing congestion along the Chennai-Howrah corridor, and improving connectivity with Nepal. The cabinet approved 4 railway multi-tracking projects worth 9,450 crore rupees, adding around 410 kilometers of railway infrastructure across West Bengal, Odisha, Andhra Pradesh, and Tamil Nadu.
The projects are expected to create additional freight capacity of around 76 million tons per annum. The expansion is targeted for completion by 2030-31. The railway projects are also expected to save around 13 crore litres of oil and reduce approximately 65 crore kilograms of CO2 emissions. The government also approved the four-laning of the 82.58-kilometer Muzaffarpur-Sitamarhi-Sonbarsa section of NH22 in Bihar at a cost of around 3,590 crore rupees. The project will improve connectivity between the India-Nepal border and Muzaffarpur while connecting with the east-west corridor. The project includes major bridges, railway overbridges, and flyovers. Next, a major negative update for Gensol Engineering. The CBI has registered a case against Gensol Engineering, Gensol EV Lease, and the founders of Blue Smart EV over an alleged loss of more than 672 crore rupees to state-run lender IREDA. IREDA has alleged principal losses of approximately 453.77 crore rupees from Gensol Engineering and 218.97 crore rupees from Gensol EV Lease. The loans were sanctioned for purchasing electric vehicles for the Blue Smart ride-hailing fleet. The case involves allegations including criminal conspiracy, cheating, forgery, and the use of forged documents. A forensic audit reportedly found alleged fund diversion and unauthorized transactions involving related entities. The matter could remain a key overhang for the company and its associated entities. Now, an important positive legal update for the telecom sector. The Supreme Court has dismissed the centre's review petition and upheld its earlier ruling allowing telecom operators to claim input tax credit on mobile towers under the GST regime. The court affirmed that telecom towers attached to land or rooftops can qualify as plant and machinery and therefore remain eligible for ITC. The ruling removes an important tax overhang for telecom infrastructure companies. This is expected to benefit companies such as Bharti Airtel and Indus Towers, along with other telecom infrastructure players. The decision could also reduce the effective capital cost of future network expansion, including 5G and rural tower deployment. Now let's look at an interesting international healthcare development. This company is not listed in the Indian markets, but the development is significant for the global pharmaceutical industry. Moderna shares surged around 135%, crossing the $148 level after its personalized mRNA cancer vaccine delivered successful late-stage trial results for high-risk melanoma. This is being seen as a landmark development for mRNA technology beyond COVID-19 vaccines. Moderna stock jumped from around $62.96 to above $148, while its partner Merck also gained around 11%. The personalized mRNA cancer vaccine, Intismeran, developed jointly by Moderna and Merck, achieved its primary objective of reducing melanoma recurrence. It also met its secondary objective of preventing the cancer from spreading, compared with Keytruda alone. The study involved 1,137 high-risk melanoma patients. The personalized vaccine is designed by analyzing the genetic mutations in each patient's tumor, allowing the treatment to be customized for individual patients. Merck and Moderna are now preparing for discussions with global health regulators. Analysts estimate that the therapy could potentially generate around $3 billion in annual melanoma-related sales by 2035. For Moderna, this could become an important long-term growth opportunity as the company looks to diversify beyond respiratory vaccines. And for Merck, the technology could become strategically important as Keytruda approaches patent expiration later this decade. Overall, this breakthrough could open the door for mRNA-based treatments across several other cancer types. So that's all for today's pre-market report. If you found this video helpful, don't forget to like, share and subscribe to Stock Market Meridian. And I'll see you again this evening with today's post-market report. Thank you for watching. Signing off. Jai Hind.